Welcome back, financial adventurers. You've made it to the second part of our financial series that will help you improve your financial IQ. Get ready for more mind-blowing insights and game-changing strategies. In this installment, we're diving even deeper into the world of personal finance, unraveling the secrets of wealth creation and equipping you with the tools you need to supercharge your financial IQ. Get ready to unlock the next level of financial success. You're about to discover the missing pieces of the puzzle. Welcome to the General Finance channel, where we're committed to helping you take control of your finances. Are you tired of feeling overwhelmed by credit card debt, unsure of how to create a budget, or intimidated by the world of investing? Don't worry, we've got you covered. Our channel is dedicated to providing you with practical tips and insights on credit management, budgeting, and investing. We upload new videos 3 to 5 times per week, so you'll always have fresh and valuable content to help you achieve your financial goals. If you like what you see, make sure to hit the like and subscribe button, as well as the notification bell so you never miss out on our latest uploads. Let's start our journey to financial freedom together right here on General Finance. Number 1. Analyze your favorite brand's financials. Examining the financials of your beloved brand can be a captivating endeavor that allows you to delve into the intricate world of finance while assessing the performance of companies that spark your enthusiasm. By scrutinizing the financial statements such as income statements, balance sheets, and cash flow statements, you gain a deeper understanding of various financial concepts and metrics. When you analyze the financials of a company, you can start to grasp its business structure, revenue sources, and profitability. You can identify key components of the income statement such as revenue, cost of goods sold, and operating expenses, which provide insights into the company's sales performance and operational efficiency. By examining the balance sheet, you can assess the company's assets, liabilities, and shareholders' equity, giving you a sense of its financial health and solvency. Furthermore, studying the cash flow statement helps you understand the company's cash inflows and outflows, highlighting its ability to generate cash and manage liquidity. By examining the financials of your beloved brand, you can gain valuable insights into its growth potential. You can analyze revenue trends over time, identify factors driving growth or decline, and assess the company's competitive position within the industry. Additionally, you can study financial ratios such as profitability ratios, liquidity ratios, and efficiency ratios to evaluate the company's performance relative to its peers and industry benchmarks. These analyses enable you to make informed judgments about the company's prospects and investment potential. Engaging with the financials of your beloved brand not only deepens your knowledge of finance but also enhances your overall financial IQ. It allows you to apply theoretical concepts to real-world scenarios, bridging the gap between theory and practice. By examining financial statements, you develop critical thinking skills, attention to detail, and the ability to interpret financial data accurately. This knowledge equips you with the tools to evaluate investment opportunities, make informed decisions, and navigate the complexities of the financial world. Number 2. Read influential personal finance books. Reading influential personal finance books can significantly improve your financial IQ by providing valuable insights, practical advice, and tried and tested strategies from experts in the field. These books offer a wealth of knowledge and experience that can help you develop a strong foundation in personal finance and guide you towards making informed financial decisions. One of the key benefits of reading personal finance books is the opportunity to learn from the experiences of accomplished financial authors. These authors have often faced financial challenges, achieved success, and accumulated a wealth of knowledge along the way. By delving into their books, you can gain access to their expertise and learn from their triumphs and mistakes. Personal finance books cover a wide range of topics, including budgeting, investing, retirement planning, debt management, and wealth creation. They provide comprehensive guidance on these subjects, presenting different strategies and approaches that you can adapt to your own financial situation. These books often include practical tips and step-by-step instructions, empowering you to take control of your finances and make sound financial decisions. Moreover, influential personal finance books can help you shift your mindset and develop a growth-oriented attitude towards money. They often explore the psychological aspects of personal finance, addressing topics such as money mindset, financial goals, and overcoming limiting beliefs. By understanding the behavioral and emotional aspects of finance, you can cultivate a positive relationship with money and adopt habits that support your financial growth. Reading personal finance books also allows you to stay updated on the latest financial trends, strategies, and insights. Authors frequently research and analyze market developments, economic conditions, and investment opportunities. They share this knowledge in their books, equipping you with up-to-date information that can help you navigate the ever-changing financial landscape. Number 3. Master the Rule of 72. The Rule of 72 is a simple yet powerful concept in finance that helps approximate the time required to double the value of an investment or funds deposited at a consistent annual interest rate. It provides a quick way to understand the power of compounding and the impact of interest rates on your investments. The formula for the Rule of 72 is straightforward. Divide 72 by the annual interest rate expressed as a percentage. The resulting figure provides an estimation of the number of years it will take for your investment to double in value. For example, if you have an investment with an annual interest rate of 8%, using the rule of 72, you can estimate that it will take approximately 9 years, 72 divided by 8, for your investment to double. This rule is important to master because it highlights the exponential growth potential of compounding. By reinvesting your returns and allowing them to generate additional returns over time, your investment can grow significantly. Understanding the rule of 72 helps you make informed decisions about the potential growth of your investments and the impact of different interest rates on your wealth accumulation. Moreover, the rule of 72 is a valuable tool for financial planning and goal setting. It allows you to estimate the time required to reach certain investment milestones or double your initial investment, providing a benchmark for trading your progress and adjusting your investment strategy accordingly. It's worth noting that the rule of 72 provides a simplified approximation and may not be entirely accurate in all scenarios. It assumes a constant interest rate and doesn't account for factors like inflation or fluctuations in the market. Nevertheless, it serves as a useful rule of thumb for gaining a quick understanding of the potential growth of your investments. Number 4. Challenge yourself with financial experiments. Embracing financial experiments is a method to test your financial acumen. Expertise and adaptability is an effective approach to increasing your financial IQ. By engaging in these experiments, you actively challenge yourself, push boundaries, and gain valuable insights into different financial scenarios. This hands-on approach allows you to learn from both successes and failures, fostering growth and enhancing your overall financial proficiency. One way to embrace financial experiments is by establishing short-term objectives. These objectives can be specific financial goals or challenges that require you to strategize, allocate resources, and track progress. For example, you might set a goal to reduce discretionary spending by a certain percentage or save a specific amount within a given time frame. By actively working towards these objectives, you develop discipline, budgeting skills, and a deeper understanding of your financial habits and capabilities. Another aspect of financial experimentation involves exploring novel financial tactics. This can involve trying out different budgeting methods, investment strategies, or approaches to debt management. For instance, you might experiment with the envelope system for budgeting or explore the concept of dollar-cost averaging in your investment portfolio. Through these experiments, you gain first-hand experience and knowledge about the effectiveness of various financial techniques, enabling you to refine your approach and make more informed decisions. Venturing into uncharted investment prospects is yet another way to embrace financial experiments. This can involve exploring new asset classes, considering alternative investment vehicles, or even participating in crowdfunding opportunities. By stepping outside your comfort zone and diversifying your investment portfolio, you expose yourself to different risks and potential rewards. While it's essential to conduct thorough research and exercise caution, these experiments can provide invaluable insights into new markets, industries, and investment opportunities. The key to successful financial experiments is to approach them with a growth mindset and a willingness to learn. Embracing experimentation allows you to test assumptions, challenge conventional wisdom, and adapt to changing financial landscapes. It helps you cultivate resilience, adaptability, and an ability to navigate through uncertainty, which are vital skills in the dynamic world of finance. Number 5. Automate your finances. Automating your finances involves setting up systems and processes that handle various aspects of your personal finances automatically. By utilizing technology and tools, you can streamline and simplify your financial management, saving you time and effort. One of the key benefits of automating your finances is the ability to reduce the likelihood of human error and ensure consistency in your financial habits. To start automating your finances, you can begin by setting up automatic transfers. This involves scheduling regular transfers from your income account to your savings or investment accounts. By doing so, you can prioritize saving and investing without having to remember to do it manually each time. Additionally, you can automate bill payments by authorizing automatic deductions from your bank account or credit card. This ensures that your bills are paid on time, eliminating the stress of missed payments and late fees. Another aspect of automating your finances is utilizing budgeting apps or software. These tools allow you to link your accounts and automatically track your expenses. They categorize your spending, provide insights into your financial habits, and help you stay within your budget. This eliminates the need for manual tracking and provides a clear overview of your financial situation. Automating your investments is also crucial. By setting up automatic contributions to your investment accounts, such as retirement funds or brokerage accounts, you can take advantage of dollar-cost averaging. This strategy allows you to invest consistently over time, reducing the impact of market volatility and potentially mitigating risk. Automatic contributions ensure that you stay disciplined in your investment approach and benefit from long-term growth. To start automating your finances, assess your financial goals and priorities. Determine which aspects of your finances you want to automate, such as saving, bill payments, or budgeting. Then set up automatic transfers, authorize automatic bill payments, and select a suitable budgeting app or software. Consider automating your investment contributions to ensure consistent investing. Regularly review and adjust your automated systems to ensure they align with your changing financial situation and goals. Congratulations, financial champions! You just completed the second part of our financial series. You're one step closer to unlocking the secrets of financial success. But the journey isn't over yet. If you haven't watched the first part, make sure to click the link in the description or the card on the screen to catch up on the foundational strategies we've covered. In the first part, we laid the groundwork for your financial intelligence and shared invaluable insights to set you on the path to financial empowerment. But guess what? There's still more to come. The third and final part of our series is just around the corner, packed with game-changing concepts and mind-blowing revelations. Thanks for tuning in to today's video on the General Finance channel. We hope you found it informative and valuable. Remember, we'll be posting new videos on the channel 3 to 5 times per week, so make sure to hit that subscribe button and turn on notifications so you never miss an update. And don't forget, we want to hear from you. Leave your thoughts and feedback in the comments section below. Is there a particular topic you'd like us to cover in a future video? Let us know. Thanks again for watching, and we'll see you in the next one. Keep building that financial savvy, and we'll be here every step of the way to help you on your journey to financial freedom.